Hello, today is April 13th, 2024. We're going to start with our disclaimer as we always do. We'll go over our calls, we'll make some predictions. I also want to take a look at the longer term count today. Just remember, everything I say can be wrong. Trade at your own risk. I try to follow the market all day, every day, several afternoons next week. I have personal business. I won't be able to do it. I'll still make the videos. Anyone interested in learning about the system can order it here. At the very least, you should remember the system predicts targets. It says nothing about the entry. Here's what we said. We said that we had a strong rally to resistance in a straight line. So either you gap over the line, or either you gap over resistance or resistance wins. We said if resistance holds, the target was to undercut Thursday's low, but if we break through, it was a very bullish pattern, had much higher targets. These are the patterns we should see next week. Well, obviously resistance held. We hit the lower target, 51.3876, so we'll cross it off the list. We were impressed by the fact that we closed over the FOMC announcement price, but there was no confirmation. In fact, that was rejected right at the open, and that resistance held right there at that high. And then we hit the target right on the nose too. We didn't have to break through, but we did. But after dropping all day, gapping down, hitting lower lows, we closed over all these lows. So for the last few hours, the bears didn't accomplish anything. Now time doesn't run out until Monday's open. If we have a gap and then take these out, then they did accomplish something because time isn't over. But the recovery like this on a Friday after a drop like this is needs only confirmation by avoiding taking these out to say that the selling might have exhausted itself at this low. You're not going to get retail customers anxious to go long after a collapse like this with the weekend coming up. It's not new buying coming in, it's really selling being exhausted if this holds, which we aren't going to know until Monday's open. Well, the afternoon, MEJT gave a sell signal and an ultimate sell signal. Those have already played out. There was an optional higher target, and when that printed, the system said it was a false move in price, it would retrace, and that worked. We're going to start by taking a look at the wave count on the weekly chart, and then work our way down to the 5 minutes to figure out where we are. Here's the weekly chart. We've completed the A, B, C in green. I know everyone else is counting this as a 5-wave structure. It's not. It's a clear A, B, C. It's a 3-wave structure. I don't see any other valid way to count it. After that, we've had a completed 5 waves up, which we'll show when we come to the daily chart. Now, when the first wave is that strong, just a straight line up, it's extremely unlikely this recovery is over. It's extremely unlikely that after making a ABC lasting a generation, you're going to finish the rally in just a few months. I mean, those things just shouldn't happen. In fact, this is the first Fibonacci target of the prior consolidation. There's a 61.8% measure from here to here. Hit the first target. When you hit it in a straight line, there might be a stop along the way at 55.80, but it's expected at the very least you're going to go all the way up to the next higher target of 59.82.5, and that's my target for the first leg up. It doesn't mean that's the end of the bull. It could be just the end of the first leg, because this ABC took so long. I'm expecting a rally to last years. When this move up is that strong, you're going to get more strength coming up just about every time. And I think any long-term player can tolerate any corrections that we have. We've now come at the first support level based on moving averages. This is the 50-day moving average, and that's support. It's a bit concerning to me that we're under 50 on the daily RSI, but there's no confirmation yet. I'm not saying we're going to go up on Monday, but if we do go up and go back over 50, that doesn't count. You still have to trade lower to get confirmation. But right now that's a concern, but I take things a day at a time, and for a day at a time, that's support. Here's our 5 waves up, and on the scheme of things, the correction we've had has been slow, begrudging, and overlapping. This is powerful and impulsive. I think this is eventually going to end, and then we're going to break out to new highs. And when wave 1 is this strong, wave 3 should be even stronger. Let's go down to a smaller time frame. In addition to the 50-day moving average, are now in the 4th wave at lesser degree. It's another support area. If this is going to hold, at least for a day, there should be some way to count this. I'm going to move this up and come back to it. But we had our wave A of some degree after wave 1 completed. It doesn't have to be A of wave 2. It could be A of 2. You don't know. At least there was an A. I think if you look at the blue count, it's now possible to count an ABC with C equal to A. And if you look at each individual wave in blue, you got a clear 5 waves up. You have an ABC with good fibs for B. You have an ABC with good fibs for C. I think that's a valid count. And we should be in wave C bracket. Now you want C bracket to have some kind of Fibonacci relationship to A bracket if that wave is over. Now the commonest place would be with C bracket equal to A bracket, and that's 50.92. And that's a reasonable candidate for the end of this leg. It's not the only candidate. There was a chance that this low held. You could still count it this way if this is an expanded flat, but I think it's fudging a bit much. And the only chance that that's the end of it, at least for now, is if this holds at the 78.6. If that's so, there should be a way to get the fibs out of this C bracket move. Well, if that's A of C bracket, I mean, you've got to hit here. You got to hit here. It's a bit iffy to me. I don't really think it's the end of C bracket, but it could be the end of this leg. Wouldn't surprise me. A lot depends on whether that 50-day moving average holds and whether we don't break these lows, and we're not going to know that until Monday. Now, Monday's pattern has the early low. That doesn't tell us where we open. The break under the FOMC announcement price and the 50 RSI level puts the Fed whipsaw target at 50.84 back into play. Remember, you wanted us to trade under the FOMC announcement by more than we traded over it. But there is some leeway there. And Friday's break, like all breaks, needs confirmation by getting followed through Monday. And that 50.84 may be close enough to that wave balance we showed at 50.92 to finish the C wave we're in. So maybe if we hit 50.92, that'll be close enough to 50.84. But that's a longer term. That's a longer term area. As far as Monday's concerned, we gap down, hit a lower low, we closed over intraday lows. Unless we gap and promptly undercut the low a day on Friday, we should see higher prices Monday. doesn't guarantee we close higher. There's a spike in the volatility index which shows people willing to pay too much money for puts, and those people are usually wrong. And they usually accompanies lows of some degree. So I'm not claiming it's the end of this correction, but it certainly is a candidate for the end of this leg of the correction. And if this can hold, we could have a recovery on Monday. And just don't forget the long-term picture. I think we have much, much, much higher prices coming. And I think any correction here is going to be manageable. So it's the pattern with the early low. Chance this low is going to hold at least on a very short-term basis. And the ultimate correction probably is within 1% of this area where we closed today. I don't think it's going to be too bad, and then I think we're going to go up again. It's a pattern with the early low, and that's today's call.